This is Financial Tech and the Guide Rock Capital Management Weekly Commentary for the week of February 25th, 2013. I'm your host, Jim Collison, broadcasting live from the AverageGuy.tv studios here in Bellevue, Nebraska, and we post the show, including the written commentary, each week out at the AverageGuy.tv. This weekly podcast brings you market commentary from Andrew Hunt, CFP and President of Guide Rock Capital Management here in Omaha, Nebraska. If you'd like to receive the commentary in advance, send us an email, Andrew_Hunt at Guide Rock Capital, all one word, guiderockcapital.com, and put subscribe in the subject. If you have questions or comments that you'd like us to read and answer on the show, we'd like to do that for you as well. You can send us an email. Just send that to me, podcast@theaverageguy.tv. And, of course, you can find us both on Twitter. I'm at Jay Collison, and Andrew is at Andrew D. Hunt. Andrew, maybe some changes in the wind this week. Tell me a little bit about what's going on.
Indeed. Well, welcome to the Guide Rock Weekly Market Commentary. I'm glad to say I am back in our home state of Nebraska this week with great Wi-Fi connection and
better bandwidth for sure.
Yes, indeed. So hopefully we won't have cutting in and out like we did last week. Well, just like you said, it's like the Canadian geese are migrating south for the winter. The stock market has started to move down a little bit last week, mostly on anticipation of monetary tightening. The Federal Reserve Open Market Committee, which met in January, released its meeting notes midweek, and many analysts reviewed those, of course, just poured over those, and there was some, there was some different interpretation, but most of it was negative. A lot of them felt like the quantitative easing that the Fed's been doing for so long now is probably going to start tapering off. So that pulled the markets down. Asian and European stock markets dipped lower, and by Friday a little bit of ground was recouped, but it still led for the first negative week as reported by the Dow Jones of the year. Last week. So it's kind of interesting. On the opposite side of the spectrum, after the Fed's quantitative easing program was interpreted to might be ending, you would think that Treasury bonds would be strongly affected because that's what they're going in and buying, right? They're going out and buying these Treasuries and creating a lot of liquidity in that market. But really, the Treasury bonds didn't really do much last week, which was really strange. Instead, we started to see yields move a little bit lower last week. We'd expect some different reactions, which was kind of counterintuitive. It was really interesting last week when we started watching that bond market. The bond market's going to be an interesting place to watch as rates change and the quantitative easing starts to back off. And then lastly, the Conference Board announced that its leading economic index for the U.S. showed that America's economy is gaining some momentum. The LEI tracks 10 economic indicators that gauge short-term economic outlooks, and they also do one for China, which is signaling improvement as well. So, that's been one where, gosh, everybody's been wondering, is China slowing down? I'm sure you guys have been questioning that from the home tech standpoint as well for technology out there. So kind of interesting. It'll be an interesting point to watch that economic indicator piece as we transition through the rest of the year. So switching gears a little bit, I wanted to talk a little bit about college. It's kind of the end of the year. People are filing their tax returns, and one thing that goes with filing a tax return, of course, is filling the FAFSA out, the Federal Application for Student Aid, when you're thinking about college.
You're speaking to my heart here, brother. Keep going.
Jimmy C's got a couple of kids in college, so this
just a few. You bet.
This one, he's feeling it.
Yeah.
And so I thought it'd be interesting to talk a little bit about tuition and fees and how students are recovering those these days. It's kind of interesting that tuition and fees actually accounts for just about 39% of the total budget for students who live on campus at a public four-year state college or university. And for those students who live off campus at a public two-year state college and university, that's only about 20% of their budget. So that's kind of a sketchy. There's a lot of costs associated with going to college these days, and if you're shocked by that number, you might be even more shocked that the average in-state four-year public institution was more than more than $22,000 for the 2012 and 2013 academic year. The things that went into that budget are things like tuition and fees, room and board, books and supplies. Hello, those are expensive. Transportation and other miscellaneous expenses. Um, so if public four-year school was 22,000, how much was like a two-year state school? Well, that was about 15,500 last year. And here's the whopper for you guys: if your kid wants to go to private, nonprofit four-year school or university, it's going to set you back about $43,000, and that's for the 2012 to 2013 academic school year. So how are kids making this possible these days? 43 grand at a private school, 22 at a state school. That's a pretty intense bill. Well, what we're finding is that on average, financial aid for full-time students is typically about $14,000 for the 11 and 12 academic school year. And there's all kinds of other opportunities where kids can get assistance. So 39% of students receive federal loans or work studies, 26% receive a Pell Grant or other federal grant, 18% institutional grants, 9% federal education tax credits and deductions, 5% state grants, and 4% private or employer grants. So there's options out there to pay for it, but still, that's a steep bill, and it looks like a lot of students you're going that student loan route. So the question is then, it's a big, hefty fee to go to college these days. Is it worth it? And I think that's a valid question. Hey, listen, I don't believe that college is for everybody. You really should do a return on investment calculation when you're thinking about going to college. And so when you look at the raw statistics, the median income for a person with a bachelor's degree who worked full-time year-round in 2008 was almost $56,000. Which is almost $22,000 more than the median income for a high school graduate alone. So, the dollars and cents are there. And then if you look at it from an unemployment rate, college grads are significantly more employed than high school grads as of 2008. So that's the other piece. You're going to make a little bit more, and turns out you have a higher probability of keeping and getting a job. So that's a big deal. Quote of the day: education is the ability to listen to almost anything without losing your temper or your self-confidence. And that's from the great poet, Robert Frost.
Man, I could have used some of that advice last night. Andrew, I don't often have a lot to say on some of these since we've come back to the podcast, but this college deal, I've got just a few things to say on it because we're really in the heat of it. And I've got three, like I said, I have three boys in various stages of going through it, and one that's getting ready. And we have learned a lot in that process. And you've covered a lot of the dollars and cents. I think if I had one bit of advice for parents, there's a lot of pressure to put your kids in school right away, right out of high school. And there's a lot of money for that, right? There's a lot of scholarships that are incented for freshmen. They're trying to get these kids in there. I mean, it's almost like a gateway drug at 19. They want these kids in school. And there's an enormous amount of pressure put on these kids to come up with a degree, right, to follow a degree. Yeah. And I do college campus recruiting. Jody and I at Gallup, we do a lot of college campus recruiting. And I see a lot of these kids that even after 4 years, they took math, but they really wanted to be in IT, or they in an IT degree, but they really wanted to do something else. And they felt all this pressure to get get on and get out, right? Because there is a lot of pressure from a financial standpoint, right? To get out of there so you can start earning some real money. I think, with my number 4 going to college, this experiment has changed me because I've had 2 kids get kind of lost in the middle of the process and end up either coming back home they came back home and we reset their college experience, right? And so, my advice really is, especially around costs, trying to go to that local junior college to start with, or something, the least expensive option possible. The money you will save by doing that will more than make up for any scholarship grants. Now, this is a big, broad stroke, so it's going to be different for everybody, and your mileage may vary. But the advice is I'm really gonna encourage my kids, get those first 2 years out of the way, stay home. I can't believe I'm saying that because I wanted those older boys out so bad, right? Stay home, get that. Let the kids bake a little bit more and mature and work through some situations. I don't think it's bad for them to work those first 2 years. Get them some real live working experience. Get them trying some things that they didn't have experience with or exposure to. Sometimes that helps them decide their degree. And then when they're ready to go, let them go. And yeah, you might pay a little more if they're going to go to a big school at that point because you've missed out on a lot of the scholarship opportunities. I'm telling you, them being in the right degree will more than make up for any costs that you would have made for scholarships. And that's my advice to parents. That's my free advice to parents going out and doing this. And if you've got any comments or questions on that, love to hear about your experiences about podcast at theaverageguy.tv. So you know what, Andrew? I went to college 6 years after I graduated. I spent 5.5 in the military and then got out, and I was married and had 2 kids when I did it, and I got through a 4-year school in 3.5 years, even married with actually we had 2 kids and we had a third my freshman year. And so it is possible. Just don't feel like the kids have to rush their way through school.
That's right. I would agree.
Very good. Well, we'll let folks know that if you're new to podcasting and you're looking for a way to listen to this show very easily each week, you might want to consider using Stitcher. Available on any browser as well on both Android and iPhone platforms. It's a great way to listen to podcasts both at home and on the road. It is audio only. And this show and all the past shows are available on Stitcher. Stitcher.com, search Financial Tech. It's education for your ears. And be sure to visit Guide Rock Capital. You can just find that, guiderockcapital.com, all one word, guiderockcapital.com. Follow Andrew on Twitter. He is just at Andrew D. Hunt, and get all the show notes, including the commentary. We post a full version of the commentary out at theaverageguy.tv. Andrew, we're doing a new thing with the show as well. I think this is going to be show 17. So it will be theaverageguy.tv/FT for financial tech. And then 017. So, folks, if you want to find those episodes, FT for financial tech, and then the show number, I said, 017. You can get that out there as well. Now, Andrew and I say thanks for listening. We'll catch up with you next week. Remember, be smart about your investing. Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.